Hello, everyone, and welcome to today's webinar. My name is Anna, and I'm with the New Mexico Small Business Development Center. Today, we have Peggy McDonough joining us, who is a certified SCORE mentor with 30 years of project management and finance experience. Peggy will be presenting Are You Tax Ready? PPP, EIDL, and ERTC implications. We'll be using the Q&A function to take questions and welcome attendee participation, so don't hesitate to ask us any questions you may have. We'll answer questions at the end of the webinar. If you have any technical issues, I can address those with the chat feature. Thanks so much for joining us. And without further ado, I'll hand it over to you, Peggy.
Thank you, Anna. I want to welcome everybody. My name is Peggy McDonough. As Anna said, I'm a SCORE certified mentor. So SCORE and New Mexico Small Business Development Center, we're working in collaboration to provide small business owners with professional training and support. And today's webinar is an example of this collaboration, and we hope you'll find your time today productively spent and useful for your business. And just a little bit of administrative issues we want to get out of the way, and Anna's talked to a couple of these. Definitely do not use the chat function during the webinar because we're not going to be monitoring it. Write your questions and the slide number, if possible, in the question and answer feature in Zoom, and we will address all questions at the conclusion of this webinar. Now, SBDC is prohibited from giving tax or legal advice. So if you have any tax related questions, accounting questions, and specific questions about your individual company situation, they can only be answered with credible authority by your accountant or your attorney. And please keep in mind the information we're covering today is changing rapidly and is based on current understanding of the programs. It can and likely will and has changed. Although we will be monitoring and updating this webinar as new information becomes available, please do not rely solely on this for your financial decisions. We encourage you to consult with your lawyer, your CPA, your payroll expert, or your financial advisor. So what are the goals and expectations for today? I'd like you to walk away from this webinar with a better understanding of the tax impacts for various COVID relief programs that have been signed into law by Congress in the last year and a half or so. We'll be starting with Coronavirus Preparedness and Response Supplemental Appropriations Act, and that was signed into law March 6th of 2020. And we'll be ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. What I'd particularly like you to leave today is more knowledgeable and with guidance on what questions you need to be asking your CPA, your attorney, or your payroll professional in order to make the best decisions for your business. We're going to be focused on three specific programs: the Payroll Protection Program, PPP, the Economic Injury and Disaster Loan, which is called EIDL, and that grant, the Employee Retention Tax Credit, sometimes called ERTC or ERC. We're going to be reviewing the timeline and the background. How did we get to where we are today? What are some of the tax implications? And we'll answer a few of the frequently asked questions. And as I said, we'll begin today's webinar by addressing any questions that you may have. So let's start. How did we start down this path? Well, on March 6th of 2020, Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriations Act. And that act declared the coronavirus outbreak a disaster under the Small Business Act. What this did is it opened the door for the Small Business Administration to use its lending authority to make EIDL loans for small businesses impacted by the pandemic. Shortly thereafter, just 2 or 3 weeks later, in March of 27th of 2020, the Coronavirus Aid, Relief, and Economic Security Act was signed into law. That's why we call it the CARES. It's quite a mouthful. It created the Payroll Protection Program and provided nearly $349 billion for PPP loans. Then in early May of 2020, Congress provided an additional $320 billion in funding. It also impacted the EIDL. It introduced the grant to pay SBA EIDL applicants an advance on their EIDL loans. And these advances were treated as tax-free grants and did not need to be paid back. Unfortunately, the funds were exhausted in July of 2020. It also created the Employee Retention Tax Credit. The ERTC is a fully refundable tax credit for employers equal to a percentage of qualified wages, which include your health plan benefit expenses that eligible employers pay to their employees. Then in December 28th of 2020, we have the Consolidated Appropriations Act, and it was signed into law. And embedded in that act was an additional $900 billion in COVID relief. Of that $900 billion, $300 billion was in aid for small businesses, about $284 billion for the SBA for first and second PPP loans, and $220 billion to provide EIDL grants to businesses in low-income communities. In March of 2021, March 11th to be exact, we have the American Rescue Plan Act of 2021, and that was $1.9 trillion. It was voted on March 10th and signed by President Biden on March 11th. And among other things, it provides small business assistance, including specific programs for restaurants and live venues. So you can see through this progression, what Congress did, what they started out with was just a lot of money, sending it out to small businesses with no real structure around it. Each time that new acts came across, Congress got more and more specific in where they wanted that funding to go. And then in March 30th of 2021, Biden extended the PPP application deadline. So what kind of environment are we in? Well, there's interpretation. What exactly did Congress mean by this, by the various acts that they've voted into law? What's the impact? Which organizations are impacted? Well, usually the IRS, SBA, banks, CPA, and of course you as small business owners. The Treasury and IRS laws and guidance have lagged, quite frankly, and are confusing, and in some instances, they give contradictory messages. There's new forms, there's new applications, there's confusing interpretation in a constantly changing environment. And this means you're going to deal with business situations and tax implications that you've never seen before. So let's start out with the PPP, or the Payroll Protection Program. Now, PPP is a loan designed to provide a direct incentive for small businesses to keep their workers on payroll. And although this ended in May 31st of 2021, you may fall into this if you did get some of the money. Now, some of that money was some of the restrictions about it was it is supposed to cover 8 to a 24-week period. And they have two draws. The first draw, which was in the CARES Act, PPP loans can be used to help fund payroll costs, including benefits, and may also be used to pay for mortgage interest, rent, utilities, worker protection costs related to COVID-19, uninsured property damage costs caused by looting or vandalism during 2020, and certain supplier costs and expenses for operations. And the money was scooped up very quickly by large businesses, leaving the small businesses unable to apply. And that's when we came across the second draw. And that one came in with the Consolidated Appropriations Act in December of 2020. That allows certain eligible buyers that previously received a PPP loan to apply for a second draw with the same general loan terms as their first PPP. Again, this program has ended as far as the applications are concerned. We're now in what we call the forgiveness section of this, of the PPP. So what is this? This is a loan forgiveness clause. Now, a borrower can apply for forgiveness once all the loan proceeds for which the borrower is requesting forgiveness have been used. Borrowers can apply for forgiveness anytime up to the maturity date of the loan. If borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then the PPP loan payments are no longer deferred, and borrowers will begin making loan payments to their PPP lender. Now, if you are in this program and you did get a loan in the second draw, you have a while before you have to start applying for forgiveness. If you have one that was in the first draw, then your time is getting pretty close as to when you need to start applying for forgiveness. Now, please be aware that the SBA offers free counseling and training events to help you with the PPP program. And there's the webpage. As you can see, it's www.sba.gov. It's a great webpage. It's got oodles, whatever oodles means, of information. Now, the CARES Act spells out that the forgiven loan amount won't be included in taxable income. So you don't pay taxes on the money that you receive. This loan is to provide businesses with the money to keep running and continue paying their employees. And it was never meant to create a tax burden for businesses that received the fund. With the passing of the Consolidated Appropriations Act on December 27th of last year, more clarity was on how the expenses covered by a PPP loan will be treated. So previously, anything you spent your PPP loan was not going to be tax deductible. Now, with this new act in December, these expenses are tax deductible. And so simply put, your PPP loan will not affect your tax filing process. So forgiven PPP loans are not taxable. So historically, if you have a business loan and it is forgiven, that automatically is taxable income. It's been that way in the Internal Revenue Code forever. However, with the PPP program, they broke that code. Congress specified and the IRS clarified that forgiven PPP loans will not count as income. And this applies whether your entire loan is forgiven or just a portion. This loan is to provide businesses with the money to keep running and continue paying their employees, and was not meant to create a tax burden. Again, simply put, your PPP loan will not affect your tax filing process. So though Congress has walked back the IRS stance on the PPP and its relation to deductible income, that doesn't necessarily mean you can leave those funds out of your conversation with either your 2020 taxes or your 2021 taxes. Whether you received PPP funding in its first iteration or later on in 2021, you should still be careful when it comes to taxes. There are still a lot of unanswered questions, and some of these questions, they stem from confusion in the PPP application process. In some cases, application woes meant business received money that they weren't qualified for in the first place. So here's an example. A company might have stated that it had employees when it only had independent contractors. While that may seem like a case of semantics, that kind of difference could have major implications when it comes time to file business taxes. It's also important that how funds are used. It's also important to keep in mind and how you're using your funds. Any money that the business owner used to pay something else that is not included in PPP requirements will have to be reported as income and expenses in their business tax return. So it's important that you have clear and concise bookkeeping. You signed a PPP loan contract and you stated you would produce monthly government-ready financials, and you are required to have bookkeeping in place. If you don't, you could suffer penalties and fines or trouble with an audit. Separate accounts to identify your PPP loan will help you with this clear and concise bookkeeping. For example, other income for PPP loan non-taxable is an example. And it's important to adjust your tax planning estimates to include any PPP expenses that were formerly non-deductible. Now, if you received a PPP loan, expect a tax audit. And that's a general statement. Let me get into a little more of the specifics. In the recent months, the SBA and the US Treasury have announced that all PPP loans in excess of $2 million are going to be audited. Loans that are less than $2 million are subject to an audit, and much lower loans have been and will continue to be scrutinized. There is a higher probability that the IRS will audit you if you have a PPP loan. And the IRS has also created a hotline for anonymous callers to report possible fraud. So how do you help to ensure a smooth audit process if one should occur for you? Don't procrastinate. Begin compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records, and PPP documentation should be kept on file for at least 6 years after your PPP loan is fully repaid or forgiven. Make copies to send, but always retain the originals. And hire a CPA who can represent you and defend your business against IRS if it's necessary. Now, how does my PPP loan count as taxable income? Well, no funds from your PPP loan, whether forgiven or unforgiven, are counted as taxable income. You will also be able to claim a deduction for expenses using your PPP funds. If my PPP loan is not forgiven in full, does that mean it counts as taxable income? As with other business loans, funds from your PPP loan that are not forgiven do not count as taxable income. Can I write off payroll and other business expenses if I used a PPP loan to pay for them? If you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with these funds. Expenses that were not paid using PPP loans can still be written off as usual. And even if your PPP loan was not forgiven, payroll and other business expenses may be written off on your tax return. Can I use my PPP loan to pay business taxes? This is an absolute no. Funds from your PPP loan may only be used to cover payroll costs, utilities, rent, or lease payments, or mortgage interest. PPP loan proceeds can't be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Businesses that have received a PPP loan can still defer payroll taxes through the end of 2020 and 2021. Will PPP loans be audited by the IRS? As I said previously, according to U.S. Treasury, all PPP loans that exceed $2 million will be audited. The IRS may also audit all other loans, so it's best to be prepared, even if you received a much smaller loan. Now, as you can see from this graphic, some states tax PPP loans, forgiven PPP loans, and other states don't. Excuse me. New Mexico, we're happy, which I'm glad we're in New Mexico, because New Mexico does not tax forgiven PPP loans, which is a good thing. Excuse me. Before I leave the PPP loan, one of the things I want to bring to your attention is if you have a PPP loan and you are in the forgiven area of it now, you're starting to compile your data and think about getting it forgiven. One of the good things is that they have created a direct forgiveness portal. Now, this portal is a web portal, and you can go directly to it. You as a small business owner can go directly to that portal, and you can register and you can search for your loan. Now, you type in your EIN number and your loan amount, and it will go out and search and pull up your loan. Now, this will only happen if the lender that you got your money from opted into this program. And at this point, there's over 1,500 lenders that have opted into this program, and it is growing because this is a great website. It's very easy to use, and it's very user friendly. And if you did apply, if your lender has opted into this program, if your lender is on that list and you can get into the application, then it only takes 10 minutes to apply, and it takes a week to get your forgiveness handled. So they've really slimmed down the process and made it easier for small businesses. Next, I want to talk about the EIDL, or the Economic Injury Disaster Loan. Now, the Economic Injury Disaster Loan is a loan option that's available through the Small Business Administration to help businesses that are struggling with financial hardship due to COVID-19. And though SBA disaster loans have been available for years, the EIDL was signed into law in March of 2020 as part of the CARES Act, which was passed by Congress to provide emergency relief to American workers and small businesses that are struggling to survive due to the impact of COVID-19. If you are a small business, a nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees that has suffered substantial economic injury as a result of the COVID-19 pandemic, you can apply for the EIDL. These loans do not go through a lender. They come directly from SBA, and there's no cost to apply. And below is the web page for if you're interested. And again, it's on this, it gives information. It's the sba.gov, and it gives great information on this option. Now, the EIDL is a loan, and it's treated the same as any other business loan as far as taxation is concerned. In other words, funds from the EIDL are not reported as taxable business income on your tax return. But what about the grants? Now, small businesses impacted by COVID-19 might be eligible for a targeted EIDL advance grant of up to $10,000, as well as a supplemental targeted advance of $5,000. Now, these grants do not have to be repaid. The SBA is now encouraging all eligible businesses to apply. The grant program was part of the initial CARES Act in 2020, but funds were exhausted within weeks. So in December, Congress allocated additional funds for the program and established more targeted eligibility criteria. So in order to be considered for one of these grants, your business must meet the eligibility requirements and apply or have applied for economic injury disaster loan. However, you do not have to get or accept the loan in order to get the grant. So do I qualify for the targeted EIDL advance? You have to be located in a low-income community, and you have to have suffered an economic loss greater than 30% and employ not more than 300 employees. In addition, the business must qualify as an eligible entity as defined in the CARES Act. That means a small business, cooperative, ESOP tribal concern with fewer than 500 employees. An individual who operates under as a sole proprietorship with or without employees, or as an independent contractor, or a private, nonprofit, or small agricultural cooperative. The business must have been in operation by January 31st of 2020, and the business must be directly impacted by COVID-19. So what exactly is the definition of economic loss? Well, that's the amount by which the gross receipts of the covered entity declined during an 8-week period between March 2nd, 2020 and December 17th, 2021, relative to a comparable 8-week period immediately preceding March 2nd, 2020 or during 2019. How do I demonstrate economic loss? Well, by getting your business tax documents organized and up to date will be essential to applying for this grant and demonstrating whether you qualify. So what exactly is a low income area? Well, the SBA has released an online tool to help borrowers understand if they are in a low income area, noting that the business address must be located in a low income community in order to qualify. So SBA encourages potential applicants to check the map to see if they meet the low income community eligibility requirement before you apply. Now, New Mexico, I would highly recommend that you get on and use this tool. What you do is you put in your zip code, it brings up the map, and it's very easy to determine whether you qualify. It's a great tool. So what are the new $5,000 supplement grants? Well, the American Rescue Plan, which passed in March of 2021, included $5 billion in funding for supplemental targeted advances of $5,000 to the hardest hit businesses. Again, how do I qualify? Well, you have to have suffered an economic loss of greater than 50% and employ not more than 10 employees. Now, this supplemental grant is in addition to the $10,000 targeted EIDL. And people who have qualified for the first grant, for the first targeted, close to 85 to 90% of them also are eligible for this additional $5,000. The SBA will reach out to small business owners who applied for the targeted advance if they appear eligible for the supplemental grant. So getting your business tax documents organized and up to date will be essential to applying for this grant and to demonstrating whether you qualify. Now, initially, the funds from EIDL advances were to be reported as taxable income. Now, this decision was reversed under the Consolidated Appropriations Act in December of 2020. It does not need to be included in your taxable income when filing your taxes. Additionally, Qualifying expenses can be written off to lower your tax liability. Legislation clarifies that EIDL grants are not taxable at the federal level, that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with these funds, and that EIDL grants will not be deducted from PPP for loan forgiveness purposes. But please check with your tax advisors about tax implications at the state and local level. Things can and do change. Will EIDL loans be audited? Well, when you receive an EIDL loan, you agree to spend the funds provided for certain business expenses. And a part of your loan agreement, you agree to maintain records and provide these records to the SBA to be audited if necessary. While there is a chance you may not be audited, don't skip this critical step. Maintain your records and be prepared to respond if an audit occurs. Does a grant count as taxable income? In most instances, grant funds are not counted as taxable income on your federal tax return. How do I qualify for a targeted EIDL grant? Well, if you previously applied for an economic injury disaster loan, you'll receive an invitation by email inviting you to apply for the targeted grant. If you have not yet applied for EIDL, you can do so at sba.gov website. And if your business appears eligible, you will be invited to apply for the targeted advance. You do not have to accept the EIDL loan or even be approved for the loan in order to get the grant if you qualify. What if I never applied for EIDL? If you have not previously applied for EIDL, you may apply at sba.gov. You will be able to apply for the low interest rate loan through December 31st, 2021, as long as funds are available. And if it appears your business also qualifies for the targeted advance or supplemental advance, the SBA will invite you to apply. Now, it's at this point I'd like to caution you because, as you know, we have large bills that are in Congress right now under discussion, one of them being the infrastructure bill. And those bills are quite expensive. And in order to pay for those bills, they're looking and will be sweeping up any funds that haven't been spent. So the EIDL loan program is one of those that are potentially on that list. So if you are interested in this program, please apply because then you will go into what's called an allocated area, and you won't be hit by this sweeping up. Only unallocated money is what the Congress is looking for at this point. Now, again, caution, this is currently in the current draft. It could change and it may change, but just to give you an idea of what's ahead. Can an EIDL loan be forgiven? No, EIDL loans, not advances, must be repaid over 30 years. And unlike PPP loans, there's no forgiveness process for these loans. Can I also apply for a PPP or Paycheck Protection Program? Oh, absolutely. Paycheck protection loans may be fully forgiven if they are spent on certain expenses, primarily payroll, which essentially turns them into a grant. But again, note that the PPP loan program is now closed. However, if your business received a PPP loan, you may still be eligible for an EIDL loan and or grant. The business may apply for both PPP and EIDL if they qualify. One other thing I also want to bring to your attention, and that's the fact that just recently the EIDL program was changed. They improved it substantially. The original EIDL program, the cap on borrowing was $500,000. Now with the Delta variant and businesses still struggling as they are, they've raised the cap to $2 million. And they're calling this EIDL 2.0. They've also expanded some of the uses that you can use the money for, and they've simplified the loan process. So this is a great time if you're interested in this to go ahead and get that money. Let me go into the next program that we're going to talk about today, and that's the Employee Retention Credit. It's a tax credit first put in place last year as a temporary coronavirus relief provision to assist businesses in keeping employees on payroll. Since then, the ERC has been significantly expanded, and in most recent relief bill in January, the ERC has been extended for all of 2021. Now, let me also insert here a caution. This is another area that Congress is looking at sweeping up some of the funds. And what has been discussed is instead of extending this program through the end of 2021, they'll shorten the length of the program and cut it off more quickly. Now, again, there's a lot of discussions and Congress moves slowly, but just want you aware that that's another area they may be sweeping up these funds. There are different rules between 2020 and 2021. In 2020, 100 or less qualified full-time equivalents, but that changed in 2021 and they increased it to 500. So you now qualify. In 2020, the tax credit was 50% of $10,000, but in 2021, they expanded that to 70% of $10,000. So the program became significantly better. Now, this credit is available to businesses with fewer than 500 in 2020, and I'm sorry, in 2021 and 100 in 2020. And these are employees who either suspended or partially suspended employers who suspended or partially suspended their businesses due to COVID-19 because of a government order, or they experienced a 50% in 2020 and a 20% for 2021 decline in gross receipts when compared with the same quarter in the previous year. Now, there were a series of New Mexico government health orders in 2020 and 2021, and each order was effective for different dates, for different businesses, and impacted people differently. So for details on who was impacted, what businesses were impacted, and the dates when the orders were effective, there is a website here you can go out and you can see in chronological order all of those orders that our governor placed out there to see which ones you qualify for. Now, the tax credits are incredibly valuable because unlike a deduction, which reduces your taxable income, tax credits reduce your tax liability on a dollar for dollar basis. And the credit is calculated per employee and is 70% in 2021. It was 50% in 2020 of up to $10,000 in qualified wages per quarter. Qualified wages include the portion of your employee's earnings that you pay and is reported on IRS Form 941. Is this credit taxable? Well, yes and no. In a way, the ERC credit is subject to income tax. So wages on the claim credit must be reduced by the amount of the credit, which results in the credit being taxable income. Reduction in wages may also impact Section 119A, eligible wages for purposes of the 20% qualified business income deduction. If the credit is claimed on 2020 payroll taxes after the tax return has been filed, an amended income tax return may be required to accurately exclude wages reduced for ERC. And most important of all, there is no double dipping between the PPP program and the ERTC. So what do I mean by double dipping? Let me give you an example. This is a theoretical company, came totally out of my head, and it's called Star Technical Support, and they're a small business in Roswell, New Mexico. And when comparing Q2 of 2020 to Q2 of 2019, Star experienced a 55% decrease in gross receipts. In order to qualify in 2020, a greater than 50% decrease must be met. This business qualified for the ERTC. In Q2 of 2020, Star also received $12,000 of PPP. Now, Star has 5 employees, and each full-time employee is paid $8,000 per quarter. That includes health insurance benefits. And in Q2 of 2020, Star paid their employees $40,000. Now, 5 employees times $8,000 is $40,000. So ERTC at 50% of qualified wages is 50% times the 40,000, which is equal to 20,000. But you need to subtract the PPP that they receive. So you subtract 12,000 and you still come up with a credit of $8,000 that they're eligible for. Let's give you another example for 2021. Again, a theoretical company strictly out of my head. There's Fred's Fantastic Car Wash, and they're located in Los Lunas. When they compare Q1 of 2021 to Q1 of 2019, Fred's Fantastic Car Wash experienced a 25% decrease in gross receipts. So in order to qualify in 2021, you had to have a greater than 20% decrease. So Fred's qualifies for the ERTC. Fred's Fantastic Car Wash has 10 employees, and each employee is paid $7,000 per quarter. Quarter 1 of 2021, Fred paid his employees $70,000. That's the 10 employees times 7,000, and that equals 70,000. So what is he eligible for? Well, it's 70% times 70,000 equals $49,000 of ERTC with an annual estimated credit of $196,000. It's quite a nice bit of change that Fred is going to be able to take advantage of. So this gives an example of what's changed between 2020 and 2021. So in 2020, it was 100 employees. To qualify in 2021, they upped that to 500 employees. In 2021, you had to have a gross receipt decrease of 50%, I'm sorry. And in 2021, it's 20%. And the wage credit per employee was 50% in 2020, and it's now 70%. Now, if your business was not in existence in 2019, you can use the average quarterly wages that were paid in 2020. There are exclusions. And again, there's a lot of chat out there between CPAs and the government as far as what the interpretation of this is. But right now, it reads that you cannot use the owner's pay or the owner's relative pays when calculating wages. That is being discussed and has a potential of being changed and interpreted different. There's a lot of contradiction going on there. So file to apply this credit using your standard quarterly Form 941. And if you want to file in advance, use Form 7200, advance payment of employee credit due to COVID-19. But most important, if you haven't taken advantage of the ERTC in either 2020 or this portion of 2021, you can file retroactively using Form 941-X. That's adjusted employer's quarterly tax return. How long do I have to file for the tax credit? Well, a ladder of 3 years after the original filing or 2 years from paying the tax. So please get professional guidance because there's a lot of nuances in this ERTC and things are changing and interpretations are changing. Get advice and help from your payroll expert, preferably a professional who's well informed on current interpretation and laws. Now, while the ERC is certainly a taxpayer-friendly relief provision, the IRS is not just giving dollars away. They're looking at taxpayer submissions both on the front end and then auditing down the road. So the best practice is for the business to provide contemporaneous documentation now when first determining whether they qualify. So to avoid headaches and heartaches down the road, businesses need to have counsel to properly and fully document and paper how the business qualifies for the ERC. Business owners need to be aware as to whether their company qualifies for the ERC, and please don't miss out on this terrific tax incentive. So let's go into a few of the frequently asked questions. My business was not shut down during the pandemic. Even a partial suspension order by the government, whether it's federal, state, or local, of your business could potentially qualify. A partial such shutdown, a disruption in your business, inability to access equipment, having limited capacity, shutdowns of your supply chain or vendors, reduction in services offered, reduction of hours to accommodate sanitation, shutdown of some locations and not others, and shutdowns of some members of a business are all scenarios that still potentially qualify for the ERC. Key considerations are, due to the government ordered partial or full suspension, was your business or is your business not able to continue its activities in a comparable manner, and did that result in a more than nominal impact on your business operations? Remember, the partial or full suspension is an alternate way to qualify for the ERC, separate from the reduction in gross receipts test. My business was deemed an essential business, so I do not qualify because of business suspension. Even if your business is deemed essential, an impact or change in your business may qualify you. For example, if you were open but your vendors were closed down or you can't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and was impacted by a government-ordered suspension, you may also qualify. My company has grown during quarantine. This isn't something I should take. Well, that's great news that your company has grown. But if your company has grown during quarantine but experienced a full or partial suspension from the government, then there are expenses that may still qualify. Sales have rebounded for us in Q1 of 2021, and I can't qualify for this credit. With the introduction of the CAA, you have the option to look at 1 quarter prior to determining qualification. This means you can determine eligibility based on lost revenue in 2020. Also, if you were subject to a full or partial suspension, you may qualify regardless. We were in losses or do not have any tax liability. Now remember, this is a refundable credit. In practice, this means that any credit overage above tax liability is sent to the taxpayer or business owner as a refund. My company has grown to over 500 employees, so we are not eligible for ERC. The employee count restriction is based on full-time equivalent employees, which is a more involved calculation than just counting everyone in the office. If you paid any employees to not work or to work less than the hours for which they were paid, then the employee count restriction would not apply for those employees. I'm a charity and the ERC is only for businesses. The ERC also may provide significant benefit to charities, churches, nonprofit, hospitals, museums, etc. Charities can be particularly good candidates for the ERC. Please remember, the tax man cometh. The ERC is a refundable tax credit and it provides robust benefits. If you have to draw up a tax provision that keeps the IRS awake at night, well, it would be this. There are a lot of nuances in filing for this credit, so make sure you work with your payroll professional to make sure you get the full credit that you are eligible for. So let's recap a little bit of what I've discussed this afternoon. What is the process? Well, Congress votes, they enact laws, and they provide funding. Then the IRS and the SBA, state and local governments, they interpret that law and the tax implications. Create new forms and reporting requirements. And the CPAs follow those interpretations and provide guidance to you as a taxpayer. So what's the result? Well, there's a lot of confusion, restating and clarification and misinformation. The deadline, an example of this was the deadline for the 2020 tax filing. It moved out to May 17th this year for a variety of reasons. There was a second round of PPP. There were changes to the employee retention credit. People continued to stay at home, making it difficult to access taxpayer data, and the IRS was short of staff due to the COVID-19 pandemic. So your 2020 and 2021 taxes are likely going to look a little different than they normally do. So this means you're probably going to deal with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. So record keeping accurate and up-to-date set of books, such as your balance sheet and your income statement, need to be kept up to date and accurate. Track and categorize all your business expenses on both the balance sheet and the P&L. Receipts and invoices should be digitally filed and recorded, and take the time, because it's well worth the effort, to be able to see where your money is going and ensure you'll be able to get the most of your eligible deductions come tax season. Now, again, please keep in mind this information is changing rapidly and is based on a current understanding of the programs. It can and likely will change. And although we will be monitoring and updating as new information becomes available, please do not rely solely on this presentation for your financial decisions. We encourage you to consult with your lawyer, your CPA, your payroll expert, and your financial advisor. And make sure that whomever you consult with, that they are up to date on the most recent guidance from SBA, IRS, or the US Treasury. Well, Anna, we've come to the end of the presentation. Are there any questions?
I do not see that there are any questions. Please don't be shy. Don't hesitate to ask questions if you have them. And in the meantime, just want to let you know to visit our website at nmsbdc.org to view our upcoming no-cost webinars or to sign up for our no-cost counseling services. I'll also send a follow-up email to you with this presentation along with the presentation slides. And I'm still not seeing anything in the Q&A. Did you have any last words that you'd like to say, Peggy?
Well, other than the fact that I want to thank everybody for attending attending this webinar, and I hope that you found it informative, that it would give you some questions to go out and ask in order to get the best and the most of the money that's available for you as a small business. And I want to again thank Anna for her help in this presentation.
And thank you so much, as always, for the valuable information and for your time. And thank you all for your attendance. We really appreciate it. Have a wonderful Friday afternoon and weekend.
Thank you.